of Let's Gossip. I'm talking fiscals, finances, and business up. Okay, so let's get into today's topic. All right, we're going to talk about depreciation and assets and how depreciation and assets apply to your taxes and how they work together to reduce your taxable income. All right, so if you're a business owner, this applies to you. You might want to take notes and gather up those expenses for depreciation, whether you have a car, vehicle, or a home or whatever. All right, so let's get into it. Hope you learned a little something, and let's go. Depreciation. What is depreciation? Depreciation is the decrease in the value of an asset over its lifespan, or the cost of an asset over its lifespan. Simply put in words, meaning an asset isn't worth as much as it used to be. Okay, so what is an asset? An asset is simply a company-owned resource that has value or produces value for a company or business. Simply put in words. Okay, so assets can be broken down into two different categories. Okay, intangible and tangible assets. Okay, so an intangible asset could be company ownership of accounts receivable, goodwill, patents, and things of that nature. Now, tangible assets could be company ownerships of cash, investments, buildings, vehicles, inventory, and things of that nature. Okay, so those are some examples of assets. Okay, now let's discuss how the two blend together, depreciation and assets, and how they apply to your taxes. So how does depreciation and assets help to reduce your taxable income? Okay, so depreciation is a non-cash expense, meaning you don't exactly pay out of pocket for depreciation. It's just something that is offered and given. Okay, so depreciation is basically when an asset is placed in service, okay, for as it pertains to the business, not when you go and buy the car, all right, but when the business has actually started. So say, for example, you just got a car for Uber, right, on December 12th, 2018, okay, and you decided to drive for Uber on maybe June 11th, 2019. So it basically starts when you actually put the asset in service or the vehicle in service, not when you actually go buy the vehicle. Okay, so that is how depreciation and assets work together. All right, when you go to a tax practitioner, there are several ways to calculate the depreciation method. All right, there's the straight line method, the declining method, the double declining line method, sum of the years, and so on and so. So with that being said, depreciation allows a company to take a tax write-off to reduce their taxable income and reduce their earnings. All right, and an asset is what is used to calculate depreciation. All right, tangible and intangible. Okay, so that's my lesson for today. Hope you learned a little something, and you guys will see me in the next video. All right, and remember, let's change the conversation and let's gossip about valuable things. And you guys have a wonderful holiday.